Welcome back, everybody. So this is going to be the weekly watch list for Monday, March 24th. The good news is we at least got OPEX out of the way last Friday, where all of our options expired on the daily, weekly, monthly, and now quarterly is going to be behind us. So as we wrap up Q1, clearly you've seen that there's been a lot of volatility. Now, the good news is the VIX actually closed on Friday below 20, which is kind of what we want to see to get a little bit more price stability with options contracts. But let's go ahead and take a look at the news for next week. So Monday on the 24th, we have the U.S. Services PMI. So this is the Purchasing Managers Index, and what it really shows is how much spending is still going on within the economy. Are people still spending money, or are they pulling back? Now, there's been some nuances where we have conflicting data, and I'll highlight those in a second. On Tuesday, we have the Case-Shiller Home Price Index. So what's going on with home prices around the country? Now, mind you, prices are still relatively high, as are interest rates. So there are not a lot of transactions being done. People who are locked in at a mortgage below 4% are not going to move and then take out a new mortgage at 7.5% or 8%. It's just not going to happen, right? And so until mortgage rates come down, you're going to see the housing market fairly tepid. Now, we have also seen a lot of the home builders come in dramatically on overall price. A few of them announced earnings last week, and the biggest issue they have is lack of sales. So we have inventory build, meaning they're still building homes, and the inventories are going up. So in order to get rid of the properties, they're having to give discounts or subsidize the higher mortgage rates with mortgage buydowns. At 10 o'clock on Tuesday, this is going to be a big number for us to watch, is consumer confidence. I would say right now, consumer confidence keeps coming in significantly lower than expected. So the consumer is not necessarily feeling fantastic about what's going on in the economy. A lot of it is driven by the news media and the headlines, tariffs, watching what's going on with the overall markets correcting 10%. Now, a 10% pullback, is that an opportunity to buy, or is there more room to the downside? If you were to look at the channel in SPY and QQQ, you could clearly see that we are still way overextended, and we could have another pullback of 10%. Will we get it? A lot of that is going to be dependent upon the news flow and what happens with tariffs. We have new home sales that are going to be coming out on Tuesday. That'll just also be a continuation of the Case-Shiller Home Price Index. Wednesday, durable good orders. And then we have the St. Louis Fed president speaking. That should be pretty much a non-event, but all of us should be done trading by then. And then this news drops before the market even opens. Same thing with on Thursday, jobless claims. So what's going on with unemployment? Is unemployment going up? Are jobs being severed? Are companies cutting back? Now, it's interesting because some of the financial service sector has said that they are going to be cutting a lot of mid-level executive jobs or higher senior jobs within the finance industry. Citibank was one of them. We're going to take a look at Citibank stock as well as Morgan Stanley. We also have the trade balance with goods, retail inventories, wholesale inventory. So are inventories building, right? As wholesalers are buying materials, are those materials getting used? Are they being manufactured into products? And then are those products actually selling? Same thing with retail inventories. Are retailers holding onto more and more of their product? A great example of that is usually the car dealerships. Are they having to sell cars at a discount to just get them off the lot? Especially, for example, 2024 models that might still be around as new ones start to roll in. And then on Friday, we have some really big data that's going to be coming up, personal income and personal spending. Now, what we are seeing here is that the savings rate is going up. So we saw a hit to the leisure and travel business last week with the cruise lines, the airlines, in addition to obviously some of the tech stocks. But the concern is that if people are worried about their job, are they going to keep spending at the pace they were spending over the last 2 years when the market is up 20% in 2024, up in 2023? Do they start to now get nervous and scared? So they are seeing the overall savings rate go up. Now, conversely, Brian Moynihan, CEO of Bank of America, spoke this week and said that he still sees that the overall discretionary spending for the consumer through their data analytics, right? You got to remember Bank of America, probably banks 1 in 3 Americans around the United States, and that they can see all of your credit card spending. They can see your debit card spending. They can see, are your savings balances going up? And his take is that the consumer is still spending on overall services, okay? Not necessarily goods. So goods would be computers, electronics, cars, appliances, things along those lines. Where they're seeing is that the service sector is still strong, meaning restaurants, entertainment, travel, things along those lines. So we have a lot of data dropping. The good news is all of this is going to be before the market open, and then we will have our final consumer sentiment. So again, my recommendation is always don't be in a trade when news is dropping. Monday is going to be probably your biggest detriment because you have news dropping 15 minutes into the market open, and then on Tuesday, 30 minutes into the market open with consumer confidence and new home sales. Definitely, that's a wait and see. Wednesday, you're fine. Thursday, you're good, other than pending home sales. Should be a little bit of a blip. And then Friday, you should be good again, but with this consumer sentiment. So just be cognizant of when news is going to drop. Let's go ahead and take a look at some of the charts, if we could. I'm going to go ahead and I'm going to start with SPY, and then we'll get into QQQ. I'm going to hold these for today, just really more so on a 1 hour time frame. So you'll note I chart on the daily, the 4 hour, and the 1 hour. I do not discern between the time frames, but you certainly could if you want to do your daily in one color, your 4 hour in another, and your 1 hour in an alternate. So be it. There is nothing wrong with that. You'll also note that I have some blue lines. So my blue lines are my interim levels on a 15-minute time frame as the week is actually playing out. And what I'm looking for here is there a place in the market where they're never getting to my yellow line? Like they keep bouncing it before the yellow line occurs. So where might that be? So you can see this on Friday of last week. They weren't getting to my yellow line. They would fail it, but then they would bounce it at this 558.04. So I want to be cognizant of that. That could be a pre-market low. It could be a 15-minute opening range breakout low. But I just want to understand where the liquidity is to say if they don't keep pushing it lower and we keep making higher lows, then we're potentially going to be trending higher. So my levels for Monday are all right here on the right-hand side. I will also post them in the Discord so you can see how we're going to trade it. But what I am noticing is what they are doing every single day for the most part is they are selling overnight, or they are selling into the morning news, and then they are taking the market higher. Then they take it higher. They take it higher. They did the same thing. So the pattern right now is downward pressure on the open, and then they move it up. So for me, I would prefer not to play the downside pressure. I would rather just wait for it to come back to my level and then play the bounce rather than getting trapped in a short, which reverses on you in a moment's notice. Let's take a look at QQQ. I think you'll see the exact same thing as we're looking at the trend here. Again, we're kind of had some interim levels that I've been watching over the last 5 days. Now, will those still be applicable this week? Yeah, we'll see. Again, I'm on a 15-minute time frame for this one. So if I wanted to kind of say, well, where do they keep bouncing the level, right, before I get down to my next price target, there is an interim level here. So again, just being cognizant of how is the market moving between price. But let's take a look at this on a 1 hour time frame, and you'll be able to see it even better. We take it all the way down here to 467, and they bounce it, they bounce it, they bounce it. We take it up here to 478, and then they struggle, then they use it as support, and then they move it higher. And this market has been fairly volatile where they are just flushing levels in a moment's notice. So we should be watching, obviously, the VIX on all of our charts. So when you're trading, I highly recommend that you have 3 charts side by side, which would just be up here in the upper right-hand corner. Click on the number 3, where you can watch SPY, QQQ, and the VIX, the volatility index. Now, on Monday, what are we going to look for here? Well, I want to see if we can even get and hold above this interim level and then potentially move higher. If not, and we fail it, I want to see how much weakness is there really in the market to push it down. But right now, for the most part, the trade has been let them push it down, take it higher, let them push it down, take it higher, versus trying to get caught in a short trade or a put and then they just rocket it. I mean, you can see what they're doing here, right? They sell it down on the open, push it. They sell it down in the pre-market, push it. They sell it down in the pre-market, push it. I want to see, are they going to sell it down? I'd love to get to 478.28 and then push it higher. But I am not going to be chasing anything in this market. I mean, you will just get trapped. Let's take a look at Apple. Apple's been very consistent with our overall price levels. I mean, they've just been playing out all week long where it is holding down here at 210. If we can get above the 213, they're taking it back up to this 217 number. If we can hold 217, I think we're in store for 220 and then 225. But if we have weakness, again, they will push it up to the level and then they sell it down to the level. So this is a great example on Wednesday. They pushed it on the open all the way up, and then as the day progressed, we came all the way down. Let's look at what they did on Thursday. They pushed it all the way up to the level. They sold it all the way down. Let's look what they did on Friday. They here just push it all the way up to the level. They did not sell it down. Okay. So when you're using these price levels, I use them as liquidity to say if I'm going to be trading between levels, what would those be? And this is what they look like for Apple. Let's take a look at Tesla. Tesla's been rejecting this exact same place over and over again. I think the interesting thing with Tesla is we now have more and more people, Howard Lutnick, the Commerce Secretary, now pumping Tesla, and his prior firm upgraded it. I don't know how that's not a conflict of interest, but that's politics. So they keep rejecting it right around here at this 250, 250. We're right back at that level. We need to get above this 249.45, 249.67 to really start to move higher to 262 and then possibly higher. Don't know that the negative news is out of Tesla yet. I think what will be interesting is getting to another earnings date where they actually have to announce sales and have sales stopped or slowed. That I am confident that they have dramatically. But this is one to keep an eye on. And then just if you're going to trade it, obviously be careful because the contracts move super, super fast. Amazon, we're doing the exact same thing. We keep coming down here to this 190 level where they love to buy it up, buy it up, buy it up. Same thing right here. And then these are my interim levels, my 192 and 198. You'll note that during the week, they don't always quite get all the way back up here yet. So again, we can use an interim level just for the week and we'll just extend it left and you'll see how they bounce it, right? And then they reject it and then they reject it. And now they're not taking us all the way down to the level here either, right? They're just holding it at this interim basis to keep bouncing it higher. So while it's only $2 off, it is meaningful where if you want to take a call trade, you have to start paying attention here and not waiting for it to get all the way down necessarily to your price level. Let's take a look at Google. Google has been on and off. This one, interestingly enough, was staying in the channel. And then when we were breaking lower, it was breaking lower quite favorably until we, again, come back up to this 165. So I think this is a trend trade. If we come down to 163.70 on the open and the market has some momentum, just play the 165 calls or the 170 calls or, something up here in this range, 168. They're going to be a little bit cheaper. I don't know what strikes are available on Google, but you can be rest assured that if you play a little bit higher, you should be fine. But you'd love to see us get out of this channel again to either break higher, or if you're going to fail the channel, again, I can't say that I would really like to short these unless the market is super weak, because as soon as they get below the channel, what do? They're, bouncing it. So we need to really get below 162 to get a little bit more fear in the market on this one. Let's take a look at Microsoft. Microsoft has taken quite the hit, and then I think it had a nice rally toward the end of the week. Same thing, 380. This is kind of your price target for a good bounce level. Reject up here at 392. You'll see they couldn't get above it back here on Monday. They couldn't get above it back here on Thursday. Friday, we're closing right at the level. But if we're going to go long, I would not probably go long until you could get above this 394 going up into 400. I don't care for when the market is in these very narrow bands, because you'll see that they could just reject it at a moment's notice, reject it at a moment's notice, and therefore you really need to see some momentum to the overall upside. Let's take a look at Meta. Meta caught a really nice bid on Friday. This one is I believe the only stock in the Mag 7 that is positive on a year-to-date basis. So here, really don't have anything until we can get above 607. I'd love to see it ideally come back down here to 589, 590, right, where they bounced it. But we need to get above this 607 with some overall confidence to the upside. But you'll see this is a high, this is a lower high. The good news is here, they've pretty much based it at this 574. So I don't foresee them really getting below that much more. But if we could come down into this area, the 580s, and then get a nice push higher, that would be a really good long trade, I think, to the upside. NVIDIA has been interesting this week. Jensen Huang did a keynote speech, and the market really didn't buy it up too much. You can see we keep coming down to this 114, and then they bounce it, consolidate, bounce it, dip down into it. But again, not a lot of momentum to the upside. So what would I be watching for this one? I think you're going to have to break not only a trend line, but you're going to have to see that there's some relative strength to the upside, right? Because what they keep doing right here is we need to hold this 116, 117, break above to go up to 122. But right now, it's kind of just struggling to get any momentum. And then if we lose this, we want to get below 114.77. So do not try to short it here at the 116. Or personally, I wouldn't. You can. But they could possibly bounce it right here, just, a couple bucks lower, and then get a violent reaction. We really want to see it go below this 114 and then head back down here to the 109 range. Let's look at some of the alternate names. I'm going to look at energy stocks. They've been doing relatively well. This is ExxonMobil. You can see here on Exxon, it's broken out of its channel that it was here. What I'd love to see this do is come back down to 113 right here and then catch a bid and go up to 116. If there's strength in oil, let it get above 116 and then buy the 120 calls. FedEx had a miserable earnings last week. You can see how they sold it off in the pre-market very, very heavily. And then it was kind of weird. A lot of volume on Friday, which you would not expect when FedEx keeps talking about how the global economy for them is slowing down. They lost Amazon as their largest shipping partner. What I'd want to watch here is, can we push up to this 50 fib? So this was a pivot high from here to this pivot low here. And can we reject and then head lower? I just don't know what the impetus is for a positive catalyst on FedEx, other than they are, restructuring a lot of their business. They're trying to become even more efficient. But it was interesting. Once they got above my price level, they grinded this thing higher throughout the entire day on Friday. So was that some overall market momentum? And then if we want to go short, where would I get short? Probably right here at this 229.37 level. And see, could we get the breakdown back to 224? So we'll go ahead and save that. And then what I'm going to do is I'm going to add an alert at this price level so that I don't have to watch the chart and see where we go there. One of the other names that awful earnings again, Nike. China sales slowing dramatically. U.S. was stronger. You can see they failed it below the line, the level, price level 66. Then this becomes a fact of, well, is this so oversold on one of the world's most notable global brands that it can probably only go higher from here? I guess we'll see, right? They have a new CEO. Do they kitchen sink it yet again? But this thing just keeps making new lows. I mean, if you can get above, $71, I think that's an opportunity for a buy, or we at least need to recover this 68.69, okay, which was this low back here on Monday, February 10th. So keep this on watch. This could be a potential. You'll note they pushed it right up to the level. Look at that. Right up to the level, which is also where this candle body is. This is where it rejected, and then they sold it off. So do not take a trade in here trying to guess, right? Puts or calls. We have no idea. Just sit, wait for it to come back to the level, go calls. Wait for it to come to the level, go puts. Wait to it to come to the level, puts, level, calls, right? And then watch how the overall market is reacting. So we'll keep an eye on Nike. And then the other one that we've had great success with over the last couple weeks has been Walmart. I think we've taken 5 or 6 trades in this thing already. I mean, their price levels are just holding and holding and holding over and over again. We took a lot of trades back here last week. And then this week, it didn't really give us a whole heck of a lot to work with. But if we could hold this $86 and then move up here back to this $87, $88 range, I do like Walmart for a possible call trade. I can't say that I like it for the puts. I definitely like it more for the calls. And then you'll note we consolidated here at these lower ranges for a few days. Now we're consolidating for a few days up here at the upper ranges. So the momentum should be to the upside. And then the other one that we'll watch, it's really struggling. It's going to be Target, right? They can't get it below 114.15. So this just becomes, is it so bad that it could possibly be a good buy area? Right? I mean, they're not getting it down to 100. They're not getting it down to 90. For the entire week, they're holding this level. Now, necessarily, we can look and see what the calls are doing on Monday. But what I'm not going to like is that the bid ask is going to be fairly wide because it's not moving. So when you have a stock that's just doing this, right, and you get into calls, this is where theta will eat you alive. So you're going to probably have to go out 30, 60, 90 days. Maybe with some longer dated options of maybe the 110s that could give you a good risk to reward. But right now, Target's not showing us anything that's, super sexy or exciting. And then I just want to show you the banks. So the banks, as the market has been selling off, this is Citi. Gaps, remember, are my yellow boxes. They're done on a daily time frame. So a gap is where you had a wick to the bottom, a wick to the top, and there's no candles in between on a daily. So I do have a gap below on Citi, a gap above on Citi. But the interesting thing here is they are still buying the banks. So while tech is struggling, they're rotating into financials, right? And are these overdone? Now, for transparency, I hold a lot of the financials because their dividends are really strong. Citi has a price target of $96. We're trading at 71. Again, there's no trade here unless we come down to 70. Then you could take some calls. I don't think I would be buying puts on the banks. I mean, clearly you can see we're in an uptrend the entire week, right? I grabbed some down here and now we are going to be good. Let's take a look at what's happening with the other banks. So look at this from a sector perspective, right? JP Morgan, same exact thing. They're buying the banks. Now you'll note we had a gap here. So I have to adjust my gap and it's going to go to now this candle low, which is going to be 224.23. 224.23 is going to be this one. Whoop, let me fix that. 224.23. The gap has now shrunk, and therefore, now this is my new gap. So how did I know 224.23? Well, this candle right here, this red one is the low. Let's check this one. This one is 224.32. Yep, so this was my lowest candle. My candle prices are up here in the left-hand corner. This is my new gap. We're going to save that, but we are trending higher. Now, I would not short this yet again unless we see really overall weak market momentum, but you will note that what they are going to do is if you go short, this ought to be the area where you can expect them to bounce it, right? We rejected it, support, support, support. Now, in order to go long on a, shorter term interim basis, we need to get above this to go to 247.30. And that's how you ought to be watching the banks. Same thing with Bank of America, right? Nice buy from the bottom. Look at how they bounced it. They bounced it, right? We had a little interim level here of 39.36, but it's only 10 or 20 cents. So in order to go long, we need to get above 42.70. And then I would take it back up to, again, where would be my price target? Where do I think this could possibly reject? Is going to be here at this pivot low where they're rejecting. So I'm trading from 42 to 43, 43 to 44 to the upside. And then let's take a look at one last one, SoFi. Again, same exact thing. Nice recovery on a percentage basis. The low is all the way down here at $10. We're at almost 13. That's a 28% gain, right? In SoFi, you can see we have a nice, well-defined trend line moving to the upside. So let me just grab a wick here, and you can see, again, okay? I don't want to go short it necessarily at 13, but once we get above, we could look for calls. Where do I want to go short? If we break the trend line and then we also fail the price level back to the downside. But what you're looking for is, 4 or 5 touch points. 1, 2, 3, 4, 5 touch points. So using the wicks and the bodies. Okay, but this is looking bullish, and banks in general are looking bullish, right? This is the last, 10 days of the market grinding banks higher. They come up, they get a pullback, higher pullback, higher pullback. We're making a higher high, a higher low, higher high, higher low, higher high, higher low. We want to see this continue with a higher high. So with that, hopefully this will give you a little bit of confidence as you're trading the market. Again, just have some patience. Only trade the first 1 to 2 hours of the market open and then just step away. But whatever you do, you have got to be paying attention to what is going on with the news and what is going on with volatility. You can see our volatility is coming down, which is a good news story, right? We want to see volatility, hold on the lower end to the downside, okay? But if we're going to be trading between these channels, right here between 19 and 21, and then we get above 21, that's when the fear really starts to set in. And then ideally, could we take volatility, back down to this level, down where we would love to see it, right? Somewhere around 17. This is trending lower, which is good for equities to move higher. So hopefully that was helpful, folks, and I hope you have a fantastic Sunday, and I will talk to you all throughout the week. And remember, in the Discord, I will never message you. I will never contact you. I will never trade for you. I do not offer copy trading. So if someone is reaching out to you, you are being scammed. So just keep that at the back of your mind, okay? With that, have a great week.